We are back with Oliver Sloup. He's joining us from Chicago. And Oliver, as we talk about livestock, we have to talk about that cattle on feed report that came out after the market closed up on Friday. And let's take a look at those numbers. We had the on feed coming in at 105%, or a 5% increase from a year ago. The trade was looking for a 106.2, pretty close, a little bit light there. Placements were expected to be 134.3. and it came in at 128% of a year ago. Now, the marketings were right on target at 101%, just as expected by the trade. But overall, let's look at our futures as they're trading so far this morning. The live cattle opened higher, sold off. Now we're back to mixed. June live cattle down 30 cents yet at 115.42, but it has come off its earlier low now by 90 cents or so. Now, the August contract actually has a plus sign, believe it or not. It's 15 higher at 117 even. And if you look at the feeder cattle market here, at this point, you have May now $1.42 lower at 136.25, and August down 87. They are both well off of their earlier lows by about $1 or so. In the lean hog market, you now have the June contract 62 lower. We're at 105.10. Had been as high as 105.90 and had been as low also, by the way, as 104.32. So a fairly wide range there, kind of in the middle at the present time. What do you think is going on here with this livestock trade? What's pulling it around?
Well, there was a lot of pessimism going into that cattle on feed report. The expectations were pretty bearish, but all in all, we came in relatively in line with expectations. So a fairly neutral report, and the market tried to gather itself right out of the gates, but really couldn't form any good footing. And if you look at the technical charts from cattle to the grains, it's essentially night and day. Hopefully we can find some sort of technical support down here in live cattle, but the last week has really put a damper on the overall sentiment. We saw fund long liquidation over the last couple weeks, and if we can't get some footing here and some good fundamental news on the cash side, potentially that continues to break us down a little bit lower. If we can't really sustain ground above 116 technically, this funds could potentially continue to liquidate and take us down to that 112 area, which is the next meaningful technical support pocket. Now, on the feeder cattle side of things, we're expecting a little bit more volatility. Obviously, the higher grain prices is a bit of a headwind there. But if we see that volatility come in on the downside of corn and corn retraces a little bit, wouldn't be surprised to see feeder cattle catch a little bit of a bid. But with that volatility in corn, I think there's going to be a lot of volatility in feeders here this week. So it should be very interesting to keep an eye on.
Yeah, they are heavily oversold. That's to say the least here. Oliver, thank you for the time this morning, and I hope you have a good week trading. Oliver Sloup of Blue Line Futures in Chicago. Janet, I'll turn it back to you.